Hello everyone, and welcome to the Latin America panel of the Future of Banking Week. Together with my high-class panelists, I want to talk about the topic of verticalization of non-banks. So how and why companies from other industries want to offer banking products to their customers and go in direct competition with banks and fintechs. I'm Garrett, head of banking at Nomad, a new challenger bank to offer global financial services to Brazilian mass affluents. And I'm glad and very excited that we got this high-class panel today. So with me are Juan Carlos Rodriguez from Uber, head of Uber Money in Latin America. We have Daniel Bergman, CEO from Movile Pay, which is part of Movile Group, where also iFood belongs to, one of the biggest food deliveries. And Sami Haddad, global head of FinTech at ZTech, part of ABM AmBev Group, which is one of the world's biggest beer breweries. So now I want to hand over the virtual mic to you guys and would kindly ask to tell us a bit more what you're currently doing in terms of fintech. So maybe Daniel, do you want to start?
Of course, Gary, thank you very much for inviting me to this panel. As you said, I'm currently leading Movile Pay. Movile Pay is one of the two fintechs that are part of Movile Group, or Movile efforts towards the fintech industry. So there is Zoop, is one company, and there is Movile Pay, and I lead this later one. Movile efforts towards fintech, it come across these both initiatives. One is towards having one company, that's Zoop, that's infrastructure that can make any marketplace a fintech and operate on this. And the other one is Movile Pay, that is exploring this opportunity to serve with financial services, this ecosystem, using as a launchpad the marketplaces that are already inside the Movile Group, as iFood, as you said before, Garrett. So as today we are very focused on building this experience and bring these financial services, especially to restaurants today. And of course, this is a launchpad and moving much beyond, not only to iFood, but to all other marketplaces in the group and beyond as well.
Thank you very much. And you're active mostly in Brazil, right? Or only?
Yes. So today we are active only in Brazil.
Cool. Thanks a lot. JZ, how's it from your side?
Well, again, thanks, Gary, for the invite, and thanks my fellow panelists. Well, I mean, it's Uber. It's a complex ecosystem. It's a large ecosystem. It's a company that, well, I guess, similar to others, but we are a 10-year-old company, and within 10, 11-year-old company, and within that time, we've managed to build a global footprint. We have Latin America, which, by the way, is the main region for our company in terms of trips, users, and earners. We call earners basically all the people and people, drivers, couriers, and restaurants earning money from the platform. So we have the largest earner community. We have the largest user community in LATAM. In terms of gross bookings, it's not number one because average fares are lower than other regions, especially the US and Canada. But we have the largest region, LATAM being the largest, most relevant region in terms of volume, let's say that. And within that ecosystem, what we've learned is that, especially for our earner side, it's basically people and even restaurants. Most of our restaurants are actually small and medium restaurants, and drivers, couriers, that because of how traditional banks act in our region, they're basically they were left out of the system. And these are guys these are people with financial needs. So they need a loan for a car, they need a loan to expand the restaurant, they need, a debit card, they need a savings account. They have a series of financial needs, and we realize we're getting to know these people really well. We have, and I don't want to jump ahead to other questions, but just to say that we know our ecosystem really well, and we identify that these guys have a lot of financial needs. So what we're doing from a payments perspective and financial services perspective at Uber is basically designing how to address and how to make our business stronger through offering financial services and payments, both to our earner side and to our user side. And that's what we're building in Latin America. It depends. Again, Latin America is I'm from the region, I will not make the mistake of putting everything in one bucket and saying Latin America. The approach is very different. What we're doing in Mexico, in Brazil, in other countries of origin, which are important for us. So, and we'll touch on that later, but it's different in each country. But basically what we're doing now is designing and launching a series of payments and financial services features and solutions for our ecosystem in the region.
Cool, thanks a lot, happy to have you here. And last but not least, Sammy.
Yes, hi, thanks Garrett. Glad to be here with everybody on this panel. So ZTech is a company that's a bit over a year old. It's part of the AB InBev group, as you said, Garrett. And the company was created to focus on one of the big assets of AB InBev, which is a network of small and medium businesses that are the customers. So globally, these are close to 6 million small and medium businesses, typically bars, restaurants, neighborhood stores, small mom and pop stores, some going to higher end and so on. And the concern of AB InBev is that if the company does not help these SMBs in a very structured way to move into financial inclusion and also adopt the digital economy, through time they will lose competitiveness, a little bit like what you mentioned, Jesse. We think that these are very important assets, obviously customers, and they typically are not seen or touched or are underbanked in the best of the situations in many of the markets. But especially, in countries all over Latin America and Africa, this is the case. So the purpose of ZTech is to bring them two big chapters of technology. One is marketplace technology and one is fintech. I take care of fintech, and within fintech, we think of two big buckets, if you wish, of services that we know they most of them need, again, in different shapes and formats and intensities in the countries, but mainly credit. Adding to JC's affirmation, we see a lot of unmet demand for credit, and also a lot of efficiency and ways to access transactions, payments, all kinds of banking services, but not necessarily in the traditional way that banks do things and at the cost that banks do them. So we think we can bring them this type of solution, and the mandate is ample. So if we have to build something, we would, but we prefer usually to partner. We do VC type investments in fintechs that have cracked a problem in a given market and so on. So we're trying to get to the solution as fast and effectively as possible.
Cool, thanks a lot. Sounds really interesting. So maybe one of the first questions, so no one of you is actually really a bank. So, and you all have your core business so far in other industries. So why are you actually entering into financial services, not in maybe building cars or going from food from beverages to food in your case, Sammy? So maybe also directly asking you, Sammy, so why are you actually going into financial services, and apparently why now? So all of you are more or less in the same stage currently, more or less with maybe 1 or 2 years back and forth, but yeah, would be really interesting to know.
Yeah, so the motivator is what I mentioned, and the reason why we think we can be successful at it is also quite straightforward. SMBs have similar problems and limitations, as you see them. So most of the time, they are not seen by the banks. They are too small. When you take a region like Latin America or Africa, a lot of them are informal, so they have no information. Because of that, they are perceived as risky. So you take a traditional bank or even, some fintechs, why would they go after a small customer perceived as risky, scattered, which is going to be costly? They would prefer, there are other customers that are in need. And so we think that because of the way we run our connection and distribution with these SMBs and the amount of information and knowledge we have about them, years and years of history, we do actually lending payment terms to these guys directly. So we can optimize two sides of this equation: reducing acquisition cost and how to reach these customers, and with their consent, of course, using their information, their history to show their credit worthiness to players who are interested in funding them or funding structures and so on. So we think we can get to them in a better way, at less cost and in a more efficient way, and get them good rates compared to what the market would price them at. So it's a right to win in a way, and at the same time helping these SMBs getting better structured financially and getting included financially. That's the main reason.
Cool. I think most of the topics are touching also. So JC, maybe what do you have to add on this side?
Yeah, well, first of all, about not being a bank, we're not a bank, but remember, every time you use Uber, either the ride service or Eats, there's a payment involved. And I cannot share a lot of details on the number of earners or users in the region for obvious reasons. But I can tell you we manage millions globally, of course, many millions, hundreds of millions, but at the LATAM level, many millions of daily transactions, payouts. Basically, we're collecting millions of transactions, paying out to basically millions of earners, collecting from millions of users. So we actually build without knowing. This is interesting because we grew a lot and we're thinking, okay, we're like some sort of like marketplace and we're growing. And then we're actually building a lot of payments capabilities without knowing, just to keep our business going, which I think is interesting. And then I'm not saying we're ready or we want to be a bank. We don't want to compete versus banks. We don't want to be a bank. Going back to a lot of what Sammy was saying, we realized that actually through these types of offerings, we can make our ecosystem stronger. You know, our earners will earn more. Actually, a driver that can get his own car will earn more than 20% of a driver that informally rents a car. So we started, or a restaurant that it's actually growing through the platform could earn, it's a win-win for everyone, could start earning a lot more. And of course, our business will benefit from that if we get them a loan to expand our business. So it's actually, we started on this because we said, okay, there's already a lot of money moving around our system. We already know about, somehow learn about payments. And if we start offering additional capabilities or offerings to our ecosystem, we will make it stronger. And that's what we care about, making our ecosystem stronger, making our earners earn more money, making our users have a better user experience through payments. So that was basically the rationale for now.
Cool, thanks a lot. Daniel, how's it from your side?
I mean, like, let me add on top of what they said, because I totally agree with them. I think that both my colleagues and us are trying to solve unmet demands. There are a lot of pain that today are not solved. If you visit small companies, small restaurants, or Uber earners, I mean, like, you're gonna see that they struggle in their financial relationship and they need help. So we can provide this help. But you ask a question, Garrett, why now? Why not 10 years ago, for example? And I'll point out 3 different reasons why now. First of all, there is technology. Technology today makes possible to have a cost of serving much better than we had 10 years ago or 20 years ago, in all aspects of financial information, in aspects of integrating the financial services with the core business, so you can provide things more integrated with less hurdle. So technology is a huge enabler of those things to happen. The second aspect that help this happen now is regulations. At least in Brazil, in the past 10 years, they started in the payment industry, but now entering also in the banking industry with instant payment, open banking, and several other things. This provides huge opportunities to reach this unmet demand that we talked about and be able to solve it in a very specific way. And the third one is possible to say that the fact that we had in the past 5 years, 10 years, some very successful examples of companies that worked in the financial services, like globally, like PayPal with eBay, in Brazil, like PagSeguro and Stone, and like Square, like iSettle, companies that are very successful in this sector, created very good examples to prove that it's possible even for other companies to invest in this kind of business. So I'll point that these 3 reasons, together with the unmet demand, make this the right time to do this right now, to help the small businesses or the earners or the people, whoever need to have this demand met.
Yeah, cool. Thanks a lot. So maybe also taking directly your first point in terms of technology. So currently every bank actually says now they're a new tech company, but it's the question if they actually are a tech company. But how are you guys using technology and especially data for adding either better prices or providing better services, better prices, better products? So yeah, how do you work with technology, especially compared to banks?
So the first thing when I talk about data is very important to say a huge disclaimer. I mean, like, we need to follow LGPD fully. We only do things related to data after opt-in of the merchant. So we don't use data like just for the sake of using data. So we are very respectful to the data. In our view, the owner of the data is the business, is not us. I mean, like we use the data only when they allow us to use the data, and not the other way around. The way that we see technology and data in this case is in the way that we can offer financial services much more integrated that can meet their demand. If you notice that someone is going to need a loan, even before they notice that they need a loan, like we are serving something to them, something that a traditional bank cannot do, because they are not fully integrated with their, due to our core business with the merchant or the users or the owners. If you can offer this experience fully integrated, we don't have a traditional system, a backlog system that we need to keep it alive. I mean, like we are much lighter. We can create on top of nothing today, and we can have an integrated system, and this can be a process with much less friction than a traditional service provided by someone from outside of that ecosystem. This isn't providing the services, but you have to consider also this maintaining the relationship with your customer after you provided the service. The technology and data, they also provide you the ability to be much more precise when to be in touch and how to be much more effective and efficient, therefore providing a better service in a much cheaper way than traditional banks.
Cool, thanks. Jesse, do you have something to add on this point?
Yeah, well, I mean, Daniel, what they're working on is not that different from a lot of the ideas that we have. I will add that, and interesting on data, I will add that we're trying to use data to improve UX, to improve user experience around payments. Because we know, as Daniel is saying, we know, of course, with all the respect to data privacy, we know how people are traveling when, you know, there are this typical behavior when you will see a user stop using Uber 2 or 3 days before they'll get paid, before the, you know, monthly or bi-weekly paychecks, they will stop using Uber. So you start seeing this, like, you know, we can actually help improve, you know, UX, or actually improve, you know, actually make it easier for people to keep using our services, or you start seeing these trends that are interesting. But I would say the most important thing about data is we can customize products for our ecosystem. If you go to a bank, typically a traditional bank, they will be very, you know, this is a product, this is what we have for this segment, whatever. We can actually create basically products. If we wanted, we could create, and I'm not saying we are, or, you know, we could create products for each one of our earners, for instance, because we know how much you earn. We know, you know, we can calculate a lot of the, you know, a lot of your spend, because we have information on you. So we can actually go and offer something very extremely valuable for each individual, which is something the traditional banking sector is not able to do now. So I think that's where we have that advantage. However, we are, and let me add this, and maybe it's part of another for another question, but we do partner a lot with traditional banks, and we are partnering. We're not trying to build everything, and I don't want to get into details now, but data is important, because for some of these partners that come from more, even fintechs that are even a little bit more traditional than we are, this data is also helping us to lower risk, because we can say, you know, we can see these trends. The scoring is not the typical scoring, because we do a different scoring with our data, and it's actually helping, for instance, to lower the risk and lower, of course, interest rates for part of our ecosystem. So data is very valuable if you know how to use it.
Thank you. And Sammy?
Yeah, I think, you know, I'm not going to repeat any of the points. They are valid for us. But on top of this, we see that, you know, technology today enables us to go really, you know, laser pointed to solve specific pain points for, you know, the SMBs with CPGs, not only with us, but, you know, problems that they have with us, you know, on supply, on rebates, you know, all the equation that CPG has built over the years applies to any suppliers. And when you take an SMB, you know, 90% of their suppliers are other CPGs. So you can really build and customize through good secure use of data, through UX, UI, through the capability of, you know, launching products very quickly, testing them, iterating and adjusting based on what you read from the market. You can really custom build products and and meet specific demands very nicely. So, this is a big advantage that we see now.
Great, thank you. So maybe then directly taking the point JC mentioned, so how about the regulatory setup? So especially now more and more service provider come up, like white label banks, banking as a service providers, but also on the other side with open banking, so more and more happening on this side, and you can actually see different players going in different deepness in terms of the value chain of the bank. So how is your Bayesian set up? So are you kind of just a front and everything in the backend is done by a bank, or do you taking some service by yourself? And actually, what is the reason behind it? Is it really because it's so complex, the banking world, it's not your core business, or why doesn't, for instance, Uber build an own global bank?
Okay, so I'll start, I guess. I mean, I'm going to say something that I think will create, it's going to be controversial and create controversy around this, but I still think regulation is horrible around banking. It depends where. I mean, we actually get to see the entire region. I think actually Brazil has an amazing, my colleagues might say no, but when you compare the regulation in Brazil, let's say the fintech, the banking financial regulation in Brazil, I will say it's probably the best or the best in Latam. And I've met with the central bank in Brazil, and they're open, they're flexible, they understand your business models, they try to work with you. Sadly, other regions for other countries is not the same. They still treat fintechs or stuff like the one we're trying, or things as the ones we're trying to do, they still treat them as traditional banking. So they will come to you and give you this huge list of requests, and they want you to set up the most complex AML capabilities, which not even a bank has. And they're requesting us to, they're making it so hard for fintechs to actually make money because of the requirements they're asking for. But anyway, I wanted to complain about that in this panel. I think regulatory speaking, and I'm going to be very frank, I think still countries like Mexico still have a room to improve. And I think they're trying, but I think some places like Mexico is not at the same level as Brazil is. Going back to your question, I mean, specifically on that, I think it depends. I think it's country by country. And I think you need a strategy. You need to have some guiding principles, right? Like who owns the customer, who gets to decide on the roadmap, how do you monetize these products, how much risk you want to take on your balance sheet, UX control. I mean, and of course, regulatory and compliance burden, because you don't want to, it depends if you have appetite to build a huge compliance team. So you need guiding principles, and then trust me, like if you go across the region, it's case by case. I mean, you basically will need to we'll make a business case in each country, and we will go through these guiding principles and decide. Some countries will have probably a license and know most of the experience. Some countries will partner with a bank and try to make it as wide level as possible. Some countries, we don't even want to make it wide level because of, Uber is not in the best position with the regulator in general. So we're going to go more on like the banking brand. So it's because of our business being so global, I will say it's case by case, but you need a set of guiding principles to decide. And it's not like a one size fits all solution, at least for us.
Cool, thanks a lot. Daniel, is MobilePay trying to build a bank?
No, so it's very good to mention. I mean, like as I said before, in Mobile Group you have two fintechs. One is MobilePay, the other one is Zoop. Zoop has the infrastructure of bank as a service and payments as a service. Even if Ambev and Uber wants to use Zoop, you are welcome, and Zoop will be very I'm selling Zoop here. They'll be very happy to provide you this service as well. So in this case, for us, it's quite simple. We use Zoop as a sister company, so we are pretty much integrated, and they have a lot of business. Not only to provide service to us, they provide service to the entire market. So we are quite happy with this setup, and it works quite well for us so far, and also we plan to do this in the long term.
Cool, thanks. And Sammy, and you have also a bigger view in terms of different markets. So you also have like around the world different activities. How is your view on the regulation?
Yeah, no, I mean, I couldn't agree more with Daniel when he said that regulation helped and opened a lot of opportunities. It's true. and at the same time, when it's slow, it's terrible. So, and I agree. Brazil has been, ahead of many other countries in the region. In many countries that we deal, like Colombia, Mexico, and so on, they compare the state to Brazil X years back. That's quite typical. But people are moving. People are sincerely moving, towards opening up. They know that this is extremely important, to be competitive as an economy as a whole. In many of the Latin American countries and African countries, you have, some monopolies, some very large banks, and so on. So they know that introducing in an organized way, in a responsible way, capabilities for fintechs, for companies to verticalize in some financial services would help the market as a whole. So we unfortunately, when you're running or operating in many countries, you have to be deeply rooted in the system. You have to connect to the system. Nobody, even if you started a full bank, which we are not, we're providing some of the services, you need to connect to the other banks, to the gateways, to the payment, to the acquirers, and so on. And payment processors or banking as a service companies are great. We are looking at Zoop, by the way, Danielle. So it's a great model.
I'll be happy to help you there if you need.
And we're also looking at regional, some global gateways, and so on. And they solve really good problems, especially when you want to move fast and occupy some space with some transactions and so on. So it's a mix of efficient ways of going into countries and applying local regulations without having to build anything from scratch.
Okay, cool, thanks. Maybe let's talk a bit more about the different products. So obviously in the beginning it started always kind of with the payment services, and sometimes it's going more to credit. But what is kind of your roadmap, or what could you also see on a further horizon as adding for further financial services? Is investment rather a topic, or crypto, or which directions could you think about on a strategic perspective?
You want me to pick on this?
Yeah.
Okay. Yeah. Well, we see, as I said, the main two chapters are credit and everything that's transactional payments, digitalizing the flows, of cash ins, cash outs, because a lot of these people are coming. But again, depend on the region per region, without generalizing, but overall, you still have, at least for our typical profile of SMBs, you still have a significant portion of transactions that are handled by cash. So a lot of the efforts and a lot of the focus on problem solving, pain points, functionalities, and so on, are to alleviate this cash problem. Cash has all kinds of costs, hidden costs, direct costs, and so on. So, and it's very hard. It's very, it's very rooted in the habits of many people, small companies, and so on. So we think, beside, the basic products, we think of ways of helping with this cash equation. There are great models in the region, like the OXXOs in Mexico, that are spreading to the region, and so on. So there are a lot of opportunities for that. And we also see a very growing interest, or already big interest, from our profile of customers, again, SMBs, in products that can allow them to get additional revenues. So services that they can embed in a wallet or on a simple financial platform to offer to their customers, be it mobile, data, top-up, subscriptions, payments, invoices. They're convenient and they give them revenue, so they typically love that, demand that. And then we see, to a lesser extent, but people going to the other financial service, micro insurance is a big demand. The more established ones start thinking of savings and so on. It's not the rule, but some of them do. So you end up going to the other product. But the core is credit and payments and transfers and so on.
Daniel, is it just the same for you? Yes, I will just add on top of that. I mean, like, payments and credit are the biggest. I could say, is the biggest pains that the merchants and the consumers have today, and the digital account is something that they also feel this pain, and it's the way that you can provide the service much better. So I would add digital account together with these two, so we can pack this all together and provide a full experience, without any friction, and a much easier way to communicate with them.
Okay, thank you. Jesse?
Yeah, I mean, to add, I guess it's not that different, but I will go back to the guiding principles. And whatever we launch, we're not trying to maximize revenue of a financial service. We're always thinking, our first, let's say, filter is this going to make our business stronger? Is this going to make our ecosystem stronger? Sammy was touching on something that it's a reality in Latin America. For Uber, more than 50% of our trips are in cash. That's not
That's amazing.
Yeah, imagine the millions of transactions and everything happening in cash. So you start having either cash arrears, like because there are issues around cash management and it gets expensive. So well, how do you get users to not pay with cash when you have countries like Mexico where 68% of people are unbanked? How do you get people to not pay with cash? So that's when we start thinking about exactly the same things, like a digital account, like a wallet. Make it simple, make someone actually create the incentives and the required or the right UX to get someone to go to an OXXO, top up their wallet, or another convenience store, top up their wallet and pay with that payment method, or Uber Eats. It's how do we make our ecosystem stronger? How do we improve UX? How do we improve safety? How do we improve the economics? Because fees, there's also a cost saving play around this. If you manage to steer a lot of this behavior towards lower cost fees. So there's a lot of this in place whenever we decide to launch. And it's not that different from what my colleagues are saying. Also, of course, as I said before, microloans or loans in general are a huge need, especially for earners ecosystem in the region.
Yeah, so you touched on very interesting points in terms of pricing. So on the one side, you say you want to strong your ecosystem, so maybe not compete on pricing. On the other side, you can push prices. So you do think that pricing is actually lower prices are the main driver, or should be the competitive advantage, or actually on the other side, you don't have to fight on the best price because you have actually the ecosystem and the access to the customer. So with improved customer experience, you could even offer higher prices and the customer probably take it, at least to a certain extent.
I mean, maybe we don't think it like that, but I mean, I see your point. We don't see it like that. I mean, you're right. But for us, it's more. I mean, even like if you say our drivers, if they were trying to, and we're not offering loans directly, we always partner for loans because it's a strategic decision that we made. So if we wanted to offer, the loan, we know this guy will not get a loan anywhere, or the loan he will get has an APR of like 95%. So we could say, I could fund at a much lower rate and still make 50%, 40%, but we're always trying to think of how do we maximize, we're not just going to give money away, but how do we maximize the benefits for our ecosystem? And we know we could charge more, we could start charging more for these fees, but it's mostly, I think we'd rather see the effects of this through increased engagement, loyalty, stickiness versus like monetizing at the maximum the financial services, because but it's a philosophical approach to this.
Garrett, on your question, I mean, like trying to help GC and making the same point. I mean, like, of course, we want to maximize the ecosystem and take advantage of this, but we need to be responsible. That means that it's not something that we can provide the service for free, because nothing is for free. I mean, like, we need to be responsible. We have shareholders. There is no place for just throwing money away, of course. But the most important part is to maximize the ecosystem. So if you can impact a broader range of people, of businesses, and being responsible in prices, but doesn't make any sense to overcharge just because you are there, because then you just fail your main purpose of to help these guys, like GC talking about the unbanked population. There is the unbanked population, and there is another part that there are banked population, but they don't have access to financial services. They don't have a loan, they cannot have a credit card, they cannot have access to transfers without paying a ridiculous amount of taxes, of rates every month. So if you fail the purpose of why you are doing this, then it doesn't make any sense. So when you talk about pricing, it's not just because you're integrated, you're gonna overcharge. You need to be responsible with price. You cannot just throw money away, but you need to keep in mind that the main goal here is to make the impact in the ecosystem that that you have access to. Actually, once we start to do this, you have the responsibility to do this correctly and broadly to everyone. Like, we have to do this. It's not that we want to. Now that we are in this, we need to deliver this.
Yeah, thank you very much. So directly taking this point, so we already talked about, or we touched it before, like the financial inclusion, especially in Latin America, it's a super important topic. So I heard numbers around 50 to 80 million people in Brazil are even unbanked. And of course, there are even more people who are underbanked. So what is your impact on the financial inclusion? Maybe Sammy, so what is your impact also in terms of, is it a new main market for you, and also from a social responsibility, how do you see this topic?
Yeah, this is definitely one of the I would say the top point that even motivated the creation of ZTech. And this is what makes this opportunity, I think, for everybody that's here on this panel really interesting, because you can build financial products and services in your ecosystem that you know very well, in a way that's sustainable, that's responsible, but also very effective, so that you can offer them services at still making money, but at significantly reduced prices, based on what we discussed in the beginning of how the system typically sees those small guys. So we definitely hope that this is going to be very, very sticky to their demand. We look at this as, of course, now we're focusing on building this, getting it right, deploying it quickly, and so on. But we look at this as a networking effect. We're absolutely open and seeking, interoperability with everybody that's going, this way. Any type of digital account, digital wallet that we can interoperate with, make payment, accept payments are extremely welcome. This is how we can make this, become ubiquitous to everybody. So it's important. We think that, just between our first two priority markets, like Latin America, Central Latin America, and Africa, we can touch 4 million businesses. And the inclusion, the social impact could be huge on this.
Cool. Yeah, Jesse, how is it from your perspective?
Well, I mean, given the nature of Uber, and as what I was saying before, just in Latam, for instance, we have 2 million earners, drivers and couriers. If I think about Mexico, I think it's around 39 or 40% of drivers. I think this is crazy. Drivers or couriers, they get their first account when they join the platform, their first bank account. 40%, because they need an account to get paid. So they will get to our green light hub and they will ask us, they will need, okay, why do I need to join? And then you need a bank account, and we'll go and get your first bank account, 40%. So we think we're actually a force driving financial inclusion in the region, just from that perspective. If we start thinking about other things, like we also have a debit card product in Mexico. Again, the first loan for most of the drivers, the first lending experience, or the first, we're actually driving. I think we are actually a total, we could totally change financial inclusion in at least in the region. And I will say that's why central banks and regulators in most countries in Latam we have talked to, especially the case in Brazil or Mexico, actually, they like the idea of Uber getting deeper into these types of activities, because they know we're actually a force to start getting people to basically adopt banking services. Because the traditional banks, I don't know if they tried, or they've been trying, or maybe not really trying, but I mean, they know it's not a way. And they really, I think that's why regulators are happy that people like Uber is joining or trying to launch more stuff, because they know we're actually a force that can get people to adopt services for the first time and actually drive financial inclusion in the region.
Cool. And Daniel, from your perspective?
I mean, like, let me, not to repeat, I mean, like, to add on top of what my colleague said. I would like to point out some specific cases that we had in the past, the recent months in our case. I mean, like, we have this pizza shop here, pizza restaurants in São Paulo that had 3 loans with different banks, and the owner, there are small places, they don't have MBAs, a lot of study that they can manage finance like Excel. I mean, like ERP is not a proper industry that they have a full management of financial CFO. They're managing the finance for them. So the owner was managing 3 debts, could not manage the restaurant. The sales were not growing, were steady. I mean, like not going down, but steady. We could offer them a loans to repay these 3 debts, concentrate only the debt with us, cheaper than he had with the previous bank. And actually, the best part of this, he could free his mind to work in the restaurant and not to be worked and worried about paying the debt to the 3+ banks. So it's not only about financial inclusion, but also helping the business to grow and not to fail, especially in these times, and not to fail and to increase to their full potential. I have other examples of other restaurants that we offer money and they open a second restaurant, a third restaurant that could increase their sales. But I do believe with this financial inclusion and this underbanked businesses that we are helping them, we actually can help them to reach their full potential to what they decided to do. And I'm sure that when they open a restaurant, they didn't decide to stay half a day managing debt with banks.
Okay, really interesting. Thanks a lot. So it sounds like, so you have a reduced customer acquisition, you have better prices, you have more data, you don't have problems with the regulator because you source it out. So what are actually your current biggest challenges and burdens to entering the market? Very directly, Daniel.
I mean, the big banks, they are big for some reason, right? I mean, like, so they're very good. I mean, like, it's not that we are just the good guys and they are the bad guys. Actually, they are good. They are partners. We work together several times. And they already have faced and overcome a lot of the hurdles that we have today. So as a company that does not come from the banking services, we need to learn with them how to manage risk. That's a big hurdle that we need to overcome. That's interesting for them, but not for us. And we need to bring them and their expertise to be able to manage this. They are very good in developing financial services. So that's why, I mean, Sami and GC, we said before, I mean, like, it's very good to partner with them so we can combine the best of the both worlds. So there's a lot of learning curve that we face today. That's one of the biggest hurdles, or some of the biggest hurdles that we face today. But I see that there are several ways that we can overcome them: partnering, learning, having people that come from traditional industry to join us and help us to overcome this, as we have been doing and will continue to do to overcome this kind of barriers that we have so far.
You're on mute.
Yeah, it always happens one in a conference. So JC, what are your biggest hurdles currently in terms of entering the market, or your biggest problems?
Yeah, I mean, like, we are entering in a market that is not natural for Movili, like financial industry. I mean, like, and there is this learning curve, and this is a hurdle. There are several ways to overcome. We are doing this, but I will say that this hurdle of entering is very delicate market of financial services is one of is kind of a hurdle that we need to be very precise. We can make no mistakes because we're talking about managing money of other people is not our money. So this, I would say that this hurdle is top of mind in our daily management worries, if I can put this way.
Okay, thanks a lot. How's it with Uber?
Yeah, I will add on top of course, learning curve, because I think it's the case for the three of us. I will add a complexity for Uber, which is we are not present in just one country, and that's good and bad. I mean, it's not good or bad, but it just for instance, if you're building a tech stack for KYC or for compliance, you need to actually adapt. Very unlike the platform, because basically our platform is very global. I mean, it doesn't, you have some small tweaks in each, if you think about rights or eats, but actually for this, you need to almost fully customize. I'm not saying you need to redo everything every time in each country, but the level of how specific you need to be country by country because of regulation, going back to that, it's complex. You know, the speed at which we were, you know, used to grow, it's different here, because then you need to be compliant, then you need to get a license, or you need to partner with someone with a license. And then the stuff you need to build is very different in each country, because regular requires different fields for KYC, or, you know, to check different lists for sanction screening. So we're actually learning about this, like the speed. And actually, culturally speaking, as a company, the speed is different. And the level of, you know, how local you need to be for a regulated financial activities is very different from other, you know, the rest of activities at Uber. So I think that for us is one of the, I would say, one of the main challenges.
Cool, thanks. And how's it within the AB InBev group?
It's, you know, reinforcing the 2 points that were made, they're quite absolutely very relevant. We face an additional challenge given the profile of our customers and the fact that they are spread, you know, in a given country, all over the country. So we have very, very small businesses, people that are not necessarily, you know, tech savvy. So we face an important challenge of it. You know, of course, we all want to do this in a responsible way, sustainable way, and so on. So, you know, there's a lot of, you know, educating and explaining to people what financial services are, how to use credit, you know, for whatever purpose you want to. So we see this as a big challenge, and it varies a lot from country to country. I mean, from all our point of view here, cash is a big problem, but not everybody thinks that. You know, people are used to cash. People like cash. People think cash, you know, keeps you under the radar for whatever, you know. so it's a big, you know, there are tons of benefits, but you really have to educate people and work very, very hard on cultural changes and adoption and change of habits. I would say this is a big issue.
Cool, thanks a lot. Yeah, so guys, are there any other topics you would like to mention in this context so far?
I think we've covered all.
Great, then.
Yeah, I think that we are in this fintechs. I mean, like, we are in this because we love this industry. We love the impact that we can bring to the ecosystem that we are already in. I think that this kind of conversation that we are talking today is great, because I see this in a way that it's not as competition either with fintechs, neither with banks, but it's much more about partnering to reach much higher scale than competing. So I would like to thank you, Garrett, to inviting us here. I think it was very pleasant talk about the matter.
Yeah, thanks guys as well. So also my main learnings are on the one side, there's a big network effects these big players as you're working for have, plus then of course using data, reducing cost, increasing access to the customer, and also especially the experience. But also one of the most interesting points for me is the social impact and this responsibility, especially in these markets, so which is really nice. And yeah, hopefully maybe even this panel helped you guys to use Zoop in future for accessing the market. And so you not need a banking license.
Yeah, Zoop is the next one. I'm already a big fan of iFood and Uber, so so Zoop
Great.
is the next frontier.
and just to be clear, I'm drinking Antarctica here, right? Just to be clear.
Oh, perfect. Thanks a lot, guys.
Thank you. Yeah,
Thank you.
Thank you.
Thank you, guys.
Thanks for organizing
Bye-bye.
this.
Thank you all. Bye-bye, guys.
Yeah.
Bye.
Take care.